Hello guys and welcome back to That Investing channel. In today's video I wanted to show you the transformation of my two portfolios into one big portfolio I hold on Trading 212. So I now no longer hold any stocks in my taxable account and I've put it all into the ISA on Trading 212. So I look forward to showing you guys that. Additionally, I'll be covering two stocks that I switched out for just that one other and my reasons for doing so. I'll give you a clue, it's got something to do with the upcoming earnings season. And finally, we'll be looking at my dividend amount I'm currently likely to receive free in this account of taxes other than the ones taken automatically from American stocks. So there's lots to get through. As always, if you like this video and want to see this portfolio grow and future tips for investing, then feel free to subscribe to the channel. Now, if you're familiar with the channel, you may recall my previous updates covering my two separate portfolios, and they look something like this up until about a week or so ago. Now, this is mainly because in the UK, the tax year came to an end in the 6th of April for 2023. In that time, I maxed out my ISA contributions for the year of £20,000. That's just mainly because I had already contributed £14,000 in cash to a cash ISA before I started investing in general. So this meant I hadn't actually been able to make any contributions to my ISA portion of Trading 212 for about 6 months now. So once I'd hit about £6,000, that was it. I couldn't contribute anymore. But with the fresh year starting out, this has all changed for the better. So I was investing in similar stocks like Texas Roadhouse and Microsoft in my taxable account. So it actually got very confusing and it wasn't exactly very pretty. Now I don't know if any of you guys have been in similar positions with your taxable accounts and your ISA accounts or Roth IRAs, but it just sucked not to add directly to my main investments and actually see them grow. When they dropped, I couldn't dollar cost average in properly, so it just felt a bit annoying. I started using certain tools to try and keep track of my investment overall performance, but it didn't actually feel the same. So I had over £1,000 in Visa in two different accounts, £300 in Microsoft in the taxable account that I sold out of recently. So it felt like I was sort of juggling my stocks, if I'm honest. So more recently, I actually sold out of those positions and transferred them over. What I was actually surprised about was how sort of nerve-wracking that whole process was. It felt weird to sell out of investments that I'd had since almost starting investing, so it felt like I was doing something completely wrong as a long-term investor. Anyway, I sold out of my positions and repurchased the stock that had initially been in with a few exceptions. Now I'll show you stock by stock so that we don't miss anything. Now their overall return looks a lot worse because obviously some of the invested cash came from gains I made in the taxable account, but we're up around £500 or so on this price, so all told, even with the sales. First off, we have Amazon. We had a bulk of my Amazon holding in my taxable account, around £1,500 worth or 11 shares, which was up by over 10% when I sold it. Now I added £50 or so because a friend actually gave me a free share and I sold that and have now combined it. So combining the two, I have 16.29 shares and a value of around £2,400. So it's up around 5% with a buy price around $176.75. It's actually worth noting I was actually bought Amazon in both accounts at the same time and I was up over 10% on both. So it feels a bit strange to buy so high. I actually bought around the $150 mark originally, but moving on. So whilst it doesn't actually show all my gains, it at least keeps the money where I had it. And I decided I sort of had to be ruthless if I wanted to see all my stocks in the same portfolio, as this portfolio obviously will continue to change with time. Now Apple hasn't actually changed. I did hold this one in my taxable account. However, I sold it around $185 a while ago and have since moved that money over into other investments. And it's a similar story with Microsoft. I held only one share in the taxable account and sold out of that position to buy Adobe around a month or so ago, and I covered it previously. Then we get on to my new holding, and something of a surprise because it replaced both my Adobe and Moody's positions. Effectively, I've combined the two now, and this is a sell and buy of a new stock, so I'll go through it in a bit more detail. I sold out of Adobe at 3.1 shares for an amount of around £1,186, incurring a loss of about £24, partly due to FX impact. Then I also sold out of Moody's, selling 3.4 shares at an amount of about £1,041 for a profit of £31.59. I think I was about 6% up or so in Moody's. Now, it wasn't my intention to actually change these positions. I was happy with both, perhaps a little less sure on Adobe. So I did a little research and found lots of information pointing to a very strong growth in the credit rating industry. This is basically because there was a big decline in bond issuance due to high interest rates in 2022, which led to revenue declines for SPGI, S&P Global and Moody's. So fast forward to 2024 and I found this report on bond issuance and debt issuance, and that was published in 2nd of April. So covering wise and taking out all the boring parts, corporate bond issuance was up 81% year over year in Q1 2024. Now, to me, this actually reflects a very favourable environment for S&P Global and Moody's to grow their credit rating business as a whole for the year. Now, the reason for the switch is actually because I prefer the diversification and growth opportunities with S&P Global. I think Moody's has been in the industry for longer, but SPGI has the other areas of the business that are growing, so I decided to switch them around. I'd rather focus on one company than three, so that focus will now be on S&P Global going forward. Moving along, we have Texas Roadhouse. Next, I only had around 5.14 shares in the taxable account, but it was up around 50% when I sold it, so I still believe in the company and bought them again straight away. I was up around 40% in the ISA account when I purchased them, so now it shows me up about 26.21% with 18.29 shares at a value above £2,100 or so. Then we have United Health Group. This one actually is in the red for me. I believe I bought it around the $500 mark, in fact a bit closer above that. So I'm actually down on this position despite the green we're actually seeing. I have the same amount invested and held no shares in the ISA before I bought it. So now, interestingly enough, actually it's up by quite a bit for the day, over 5% after they reported earnings. So that's quite good to hear, and now I actually have about 8.09 shares at a value of around over £3,000. Like I said, not really up. Next up we have VICI Properties, which I have around half my total split between the two accounts initially. My position in the other account was largely flat when I transferred it over, and I actually added to this position today because it's gone down so low it's criminal to me, if I'm honest. So I bought 4.7 shares for $27.14 today, adding around £104 to it, bringing my total investment for VICI down to around £2,604. So we're in the red by about 7.49% for our 118 shares. Finally, we have Visa, and again I was split fairly evenly across the portfolios with this one, just over £1,100, up around 18% with 5 shares in the taxable account, which was transferred straight to the ISA, meaning I now have 10 shares with the account valued above £2,200, up 6.43%. which increased my cost basis by quite a bit, seeing as I bought this one around the $235 mark or something similar to that. Before we get into the overall return of the portfolio and dividend income for the year, if you've got something out of this video, then please feel free to give it a like and comment what your portfolios are looking like so far this year, because I'd actually be quite interested. Now, moving swiftly along, altogether I'm up around 4% for this account, even with taking the gains that I had from my taxable account and reinvesting them. I think it was up around 8% across both portfolios when I transferred them over, but in truth I'll probably just forget about my previous gains and losses and work towards the bigger picture. I'm just really happy to have a portfolio that is all in one place, because now I can use analytics to predict my total dividend amount. So all told, I should receive around £249.41 annually. That's with all the taxes taken away, with the yield sitting at about 1.47% over about 1.7% if it wasn't taxed. That will be getting reinvested back into the portfolio as we go. So this moving off portfolios has me taking around 50% of the contributions I could make this year for my ISA total. So I have around £9,000 to play with, and I may have a surprise when I transfer over my cash ISA this year. So I can contribute a bit more this year, and I think I will do that fairly easily and save some of the money back for my emergency fund, and I'll always keep adding to it as we reach 2025 to hit that elusive £100,000 mark. But thanks for watching, guys, and I'll see you in the next one.